Hi, welcome to Financial Education for the Nation. My name's Warren Shute, and I'm here today on this chilly day with delightful Paul. How are you, sir?
Hello, Warren. I'm good, thanks. Good morning. How are you?
Very good, very good. It's a beautiful time of year. I love autumn. The change of seasons, it's fantastic. So, it's makes you appreciate living in a country that's not always hot.
Yes, too right. Well, today I wanted to talk about something that ties in a little bit with that, with a little bit of forward thinking, because there's a lot of pressure on our time, and I wanted to kind of think ahead a little bit about knowing our numbers and getting financially organized properly.
Okay.
Now, for some of us, our financial affairs are really quite simple. If we're employed, maybe we've got some savings, probably a mortgage, and maybe a pension. So it's not that tricky necessarily. But I want to understand a bit more how we really find out about our income and our expenditure in a really in-depth kind of way. So when it comes to what we have, what we owe, what we own, as the saying goes, where do we start? What should we do? Should we get a huge Excel database and just start listing stuff down? How should it work?
Okay, so even if you are employed and you think your affairs are fairly straightforward, you've got to do this as well. Because heaven forbid, if you were to pass away yesterday, how are your executors going to know where all your assets are, what you owe, and sort your whole affairs out? So let's leave our estate in order so that in the event of us passing away prematurely, things are organised, someone can take over relatively easily. But for everyone, I believe clarity is power. When you understand it's like the homework, isn't it? Come on, let's face it, you go back to school, you were given that assignment, and you looked at it and thought, I just do not understand this. But then you sat down with your teacher, you sat down with your classmates, sat down with your parent, and they went through it and explained it to you. It was clear. And it's not as complicated as I originally thought. So clarity is power. And what you get with clarity is the enthusiasm to make decisions. So Excel spreadsheet, nice and straightforward, list your income at the top, and then go through each and every one of your expenditure items. And you gather those expenditure items by going through your statements, going through your bank statements, going through your credit card statements, looking at where you spend money. We've got a wonderful spreadsheet, so it's almost done for you on the warrenshute.com website that you can do this. And there is a link to most of the items on there so that you can do this, the three questions. Do I need this? Do I want this? Can I get a similar experience for less? So yes, I believe you need some form of spreadsheet. Now, I've met people who've actually handwritten it. That's absolutely fine. But you do need to have it written down or put down in paper, because you're going to come back to it every quarter, check in, have a look at this. And every year you're going to look at it and say, can I make changes? Can I reduce any of this? And it's nice to see, I've reduced that, or council tax has gone up by more than I expected. So you've got some kind of planning there. Does that make sense?
Yeah. What about for people who are self-employed, where income isn't a fixed amount, where there isn't a salary that drops into the bank account, and it varies, and it can vary quite widely, particularly if you're in a seasonal business. That can affect planning a little bit. Okay.
This is probably one of the most common questions, if I'm honest, for small business owners. It's really good that you raised this. And I'm going to simplify it, but it comes down to capitalization of the company or the business. Okay. So what you basically need to do is you need to capitalize or have some cash in the business so that you can take a draw from that business, whether it's a company or a sole tradership or partnership, regularly. So you need to do the money plan on the business. So you need to look at the business and you say, right, what's my income? So what are my invoices? What income do I get from various sources? And like you said, it's going to be different throughout the year. And you're going to have to do a 12, or what I suggest is a 36-month cash flow. Now, this isn't complex stuff. You can do it, but it's basically what income comes in. You have 12 or 36. Start off with 12. If you don't like numbers, start off with 12. We can then extrapolate it for another 2 years. But I did something similar for the student financial guide. I did a student financial cash flow for the whole time that they're at university. And it's what money comes in every month and then what payments are going out. And you're doing this for a company. or your business, and you're going to say, okay, well, I might get no business in December and January because everyone's partying or can't be bothered to do any business. January, February are busy, and it varies throughout the year. Like I said, it's seasonal. But some of your expenditure, like maybe your office rent or your salaries and things, are fixed. It doesn't matter what money comes in, you've still got to pay those payments. So by looking at it over a period of time, money coming in every single month, money going out every single month, you'll have a positive or a negative, a deficit or a surplus every month. And you can then put a bank balance in there. And I do this on the student guide. And in fairness, I could probably crib that, copy that, and do it for businesses. And you will see what's the minimum amount of money you need in your business to ensure that cash flow is consistent. Because you need to capitalize. You need to put a chunk of money into your business so that you are able to take a consistent draw from your business every month. Okay. Then looking at your personal money plan, your personal cash flow, you have got a regular amount of money coming in. So you've got two hats. You've got the business owner hat where you're looking at business cash flow and you're planning forward 3 years. And then you're looking at your personal hat, which you look at obviously a lot less often. And you say, okay, I've got this money dropping into my account every month. So you do have a regular amount coming in. You can't do it any other way. You have to have some kind of predictability.
Okay, and that's great. And when it comes to pensions, those of us who don't work in the financial industry, pensions is this, it can be a bit of a scary thing in terms of really knowing what's going on. And we might get a statement once a year and we might look at it and think, okay, great, I've got some money there. Especially when it comes to the state pension added on top, how do we find out what's in our pensions, what assets we have?
Okay, so there are three main types of pension out there. There are defined benefit, which used to be called final salary. There are money purchase or defined contribution, and there's the state pension. Okay, mass generalization. If you're another financial planner, don't pick holes in me. Let's simplify things. There are three kinds of pension. Okay, so it's quite reasonable that you will get a statement from a current final salary defined benefit scheme every year. But if you're a deferred member, in other words, if you've left the scheme, it was from a previous employer, they may not send you statements. So you're going to have to contact them and ask them for a statement, a projection of what your benefits are. And you should do this every year. We're coming up to the time of year when it's perfect for you to do it. It doesn't matter when you do it, but my brain works in calendar years because wherever I look, if I look on my diary, if I look on my calendar on the wall, it's the year starts in a January. It could start in a February, it could start in a September, it doesn't matter. But you just need to have a time of year which works for you where you say, right, this is in the diary, this is an appointment with myself, and I'm now going to get my finance in order. I'm going to go through the money plan. And what are the step 2 of the money plan, get financially well organized, is send off and get these statements. So write off to any deferred pension benefits, write off to any personal pensions or any defined contribution schemes, get the values of those, and send off a BR19, a BR19 to the Department of Work and Pensions. You can also do it online, which I think is probably a lot quicker, but I'm a creature of habit. I've been sending off BR19s now for over 20 years. It's just habitual for me. Maybe I should upgrade and do it online. But get a forecast of your state pension as well, because the state pension rules changed, and I am writing a guide on those state pensions, so maybe that's something we can cover in a future date.
Okay, and how do we get the state pension? Where do we go for that information? Is that also on the BR19?
Yes. So what you do is you go on to warrenshute.com. There's a BR19 form on there. You fill it out. So you put your national insurance number, your name, your date of birth, your address. It asks you whether you've been married before because you can accrue benefits from your ex-partner if you've been married. You send it off, and about 2 weeks later, they will send you back a state pension forecast. And the state pension forecast is quite clear to read. Maybe we can do a whole session on this. It's very clear to read. The first part basically says what you will get assuming you continue to work until your normal retirement date. And that for most of us is 66, 67, 68, okay, depending on your age. So that would be the top line. The second bit of information is what you've accrued so far to date. And it will say, okay, so based on what your working life, if you were to never work again, this is how much state pension you've got. And if you're more mature in your years, if you're approaching retirement, you might find that the two are the same. But the state pension is a massively complex area that is changed over successive governments. and way too complex to go into now. But the simplest thing for you to do is to request a BR19. So you can get one from warrenshute.com or just Google it, Google state pension forecast, fill it in, send it off to the Department of Work and Pensions. It will come back about 2 weeks later and it will tell you the amount of money you will get at retirement. So you don't get a cash value. You can't draw this out and cash it all in. It's just an income promise from the government to you.
Okay, great. And then I guess the third broad area, investments, and again, particularly if we've been investing for a while, maybe we've done it in different areas, and it's not necessarily easy to collate all that information. What do we do about that?
Again, you have to have a good think to yourself, where might my investments be? So if they're with providers or stockbrokers or just in bank accounts, you need to contact all these different people and get current and transfer valuations on all of them. Or encashment valuations. It's very much likely that most of them will be the same. And then you need to sort of add them all together. You need to start looking at things like charges. You need to start looking at the asset mix, so how they mix up. But you also need to ask one important question. Do I have unsecured debt? Do I have an overdraft? Do I have a credit card? Do I have a loan? Should this money really be paying that off first to free up some disposable income before I start investing more? Okay. And also for most of you, putting money into a pension is going to be a more efficient way of saving than it's going to be putting it into an ISA. The only caveat behind that is if you've earmarked this money for something specific like a university or a college fee or something like that.
Okay, and what you've just said there leads on nicely to the kind of liability side of things. And I know we've covered the snowball system before, but just briefly, how should we go about organising these things? It's a similar process, get in touch with our credit card people, our loan providers?
Yeah, I think this is the most important thing, if I'm honest, because people who tend to be out of control financially tend to have numerous credit cards or loans. And they don't tend to look at the knock-on implications of this, okay, the interest rate and the cost, the psychological drain on you having credit cards and loans. And although you might consciously say, I'm not worried about this, I would say deep down you probably are, and it's taken a lot of emotional energy as well. So I can't remember honestly whether I've merged them yet, but there is on the website, there's a credit card snowball sheet, and it allows you to organize all of your credit cards and loans. You put them on there so you know what they are. You ring up your providers and get the interest rate, the current balance, the minimum payment. Clarity is power. Once you've got the clarity, you can then attack it. It's like losing weight. There's no point in trying to set yourself a goal of where you want to go without stepping on the scales and know where you are to start with. And it's a journey. You don't have to pay these off by Christmas. You don't have to pay these off in the next year. What you have to do is stop using them and then put a plan, a strategy in place. The snowball one is a perfectly useful one that will pay them off over time, and enjoy the process, guys. Enjoy the process.
Okay, great. So I think and one of the reasons I wanted to talk about this today, it's early November at time of recording, and we've got kind of a couple of months. Christmas mania is going to take over soon and everybody's going to be focused on that. But just thinking ahead to January and what you said about calendar years, and that's a great time to get on board with the money plan, and at least being aware of these kind of things in advance just helps with that financial organisation.
It certainly does. And if you're new to this, you've not listened to me before, and you are kind of out of control financially, this is the perfect time of year. Get onto the 100 Day to Christmas money plan. So on the website, there's 100 Days to Christmas. Put it in the search bar at the bottom, 100 Days to Christmas. That started, well, not 100 days ago, 30 or so days ago. Play catch up, see where you are. Because one of the things I want you to do if you are in trouble financially is stop using your credit cards. Even if it means this Christmas is a slightly different Christmas from previous years, you might enjoy it more. But stop spending on the credit card. Stop taking out loans. It is not right. It is not acceptable. Then put a plan in place to start paying them off.
Fantastic. All right. Well, I'm off to get financially organised.
Great. Good speech, Paul. Take care.
Thanks, Lauren.